Thank you very much. Chairman Brown, Ranking Member Toomey, and members of the committee, thank you for inviting me to testify about crypto and the collapse of FTX. I'm the chairman of O-Shares, an ETF indexing firm, and also a private equity and venture investor. I support entrepreneurs at every stage of their journeys. I have dozens of family-run businesses in our investment portfolios. My extensive social media platform enables me to tell the stories of their products and services to help reduce their customer acquisition costs. It's a model that has worked well for over a decade and helped support so many small American businesses, which create over 60% of the jobs in the American economy. In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, a developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. In August of 2021, nearly 3 years after I started allocating capital to the crypto sector, I entered into an agreement with FTX to be a paid spokesperson. I was paid approximately $15 million for these services, plus approximately $3 million to cover the portion of the taxes due. Of the remaining amounts, approximately $1 million was invested in FTX equity and approximately $10 million in tokens held in FTX wallets. The equity is now most likely worthless, and the accounts have been stripped of their assets and, interestingly, financial records. I've written all off to zero. Because I was a paid spokesperson, however, I never invested any capital from our partners or LPs in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this situation will be discovered by following the transaction trail after obtaining the records. I've applied for membership on the FTX Creditors Committee in connection with the bankruptcy proceedings because I feel obligated to pursue the facts on behalf of all stakeholders and believe my perspective of this situation will be helpful to the other creditor committee members. The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, in the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise had no impact on the long-term potential of American debt and equity markets. I'm only one of many investors that have experienced this loss. However, this changes nothing in terms of the potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. I understand why many leaders in the banking industry are open skeptics, calling for the banning of these new crypto software technologies. Disruption is always uncomfortable at first, and entrenched businesses abhor new competition. But it has been proven time and time again that disruption is absolutely necessary in advancing the economy. There is the risk of investing in crypto, and then there's also the risk of not investing in it and letting others accrue its benefits first, essentially gifting them a competitive advantage that could be very, very hard to recapture. So where to start? We need to clear policy and regulation for the crypto industry, its entrepreneurs, its developers, and its users. Congress should start by passing bipartisan legislation that creates a sensible regulatory framework for digital stablecoins backed by the U.S. dollar. Why? A well-regulated stablecoin backed by the U.S. dollar and other high-quality liquid assets could become the global default payment system over time. The U.S. dollar already denominates the price of oil and other commodities. Why not everything else? What could be more bipartisan than this? Let me close with this. We need to get to the bottom of what happened with FTX, but we can't let its collapse cause us to abandon the great promise and potential of crypto.
Thank you, Mr. O'Leary.
I think there's a case to be made that there should be a regulatory regime on disclosure requirements for an issuer, that there should be a regulatory regime for secondary market trading, but I think we ought to make it specific to this sector, because to try to shoehorn it into decades-old legislation that deals with different instruments, I think is very problematic. Mr. O'Leary, it seems to me that tokens are very often the tool or mechanism to incentivize people to validate and maintain a distributed ledger. Now, you can gamble with them. You can speculate as to what a given token is going to be worth. But it seems to me that underlying blockchain technology is potentially extremely powerful, is actually already being used in a variety of ways. Could you address this notion that the only possible use is a zero-sum gambling enterprise?
No, I don't agree with that at all. It's preposterous to say that. The potential of blockchain technology in authenticating physical assets and contracts and tokens, as you suggest, is incredibly powerful. In fact, I think what's going to happen as we peel the onion on FTX over the next year or two is the shining outcome of the success of the blockchain to track these assets will become the focus of everybody. We will realize every security or token that left FTX, left Alameda, got traded between shareholders, all tracked irrefutably on the blockchain. The power of this technology is very harnessable, very powerful, and of course we should lead the world in it because so much of it is developed here. The hottest hands coming out of MIT right now, where do they want to work? A third of the class. They want to work on the blockchain. You can't take that much potential and not expect extraordinary outcomes. This is a remarkable technology. Yes, it requires regulation, but if you just ask where the hot hands are going, the great engineers, this is where they're going. So, we train them here, and then we kick them out of the country so they do their work somewhere else.
So let me ask you directly. You were an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, "Okay, let's step back. This is a simple case in my mind of where did the money go?" And I said, "Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it?" And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies because they obviously were potentially the two largest shareholders in the firm. They had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulator's request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX. Wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure. It's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated, global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Mr. O'Leary, I'm sorry, you're about 3 minutes over. You have any follow-up, Senator Toomey?
I had another topic, so if we do a second round, I'll take it up then. Thank you, Mr.
Thank you. Senator Reid.
Mr. O'Leary, in your testimony, you said you hope that the events at FTX would, quote, put renewed focus on implementing domestic regulation. Do you agree that FTX customers and perhaps your own investments would have been better off if FTX had complied with the existing regulation we have that bars brokers from trading with customer funds?
Absolutely. But they were not compelled to do that because they were offshore and unregulated. I think the model will not work. There's examples of how regulated exchanges that are attached to broker-dealers have worked. You only have to look up to Canada, the OSC order, where BitBuy wallets are controlled by the regulator. They limit the number of tokens. They limit the margin. They limit the lending. They do an exhaustive test of proof of reserves. That's just the rules they implemented that they just copied from their own exchanges.
Right.
We need to do the same thing here. It works. It's been proven to work. There's millions of Canadians that have accounts that are working under a very strict regulatory environment. We can implement the same.
Well, I agree. We already know what should and should not be allowed when one person is handling another person's money. Whether we're talking about a new celebrity-endorsed coin or an index fund, I think we'd be well served to keep in mind the basic principles that have largely saved and served investors and the markets well for decades. As I was listening to some of your testimony back in my office, it all seems like you looked at this as more of a security than a currency at the end of the day, and that makes it pretty clear for me.
Mr. O'Leary, in one of the answers to the other to one of the other senators' questions, you said that the prize for crypto is to get regulated. Is that because it gives it credibility?
It can't exist for the institutional client. The potential of crypto is for it to be indexed with sovereign wealth and pension, where about 70% of the world's wealth is actually managed. There's great interest there, particularly around Bitcoin and Ethereum and a few other platforms. But they have no infrastructure to apply to their compliance platforms. When you are managing a $900 billion fund, every day you have a massive compliant infrastructure that marks to market all your positions. There is no infrastructure for crypto. I want to make a note here just around this regulatory issue that you're raising, and it's a good one. Of all the entities that went to zero, that went to bankruptcy in the FTX portfolio, the only one that is not bankrupt out of the 130 plus, and this is, you know, probably the best evidence of why we need regulation, is Ledger X. Why? It's regulated by the CFTC. 100% regulated. It is not bankrupt. Had the other entities been regulated wherever they were, they would too not be bankrupt. And so just look at this. This is a use case of why we need regulation. There wouldn't be this tragedy and all of this drama and all the rest of this stuff and the loss of billions of dollars. The lack of regulation has caused some problems here, and it will continue to. And the evidence is right here. The only entity that didn't go to zero in the FTX portfolio, CFTC forced the scrutiny, forced the transparency, forced the proof of where the assets were held and the reserves, forced the lack of commingling with the assets. They forced it. They did it. Proof positive that you can regulate this asset class.
I want to thank you all for being here today. We'll have some questions for the record, but I appreciate the hearing, Mr. Chairman.
Thanks, sir.
I hear you, Mr. O'Leary, you touched on this just a moment ago about the impact of regulation and the certainty that it could bring. And from your perspective as an investor, Mr. O'Leary, what needs to change here in Washington from a regulatory standpoint so that capital actually does flow to U.S.-based entities and empower U.S.-based entities to win on the global stage?
Every global platform, the #1 prize is to be regulated in the U.S. market, the #1 financial market on earth, period. Now, when you talk about other money center banks or other financial services industries that want to do business in the U.S., they must disclose their worldwide operations. They are scrutinized by the rules we already have in place. A coordinated effort between the Canadian regulator, the U.S. regulator, the ADGM in Abu Dhabi, the regulators in Singapore, basically laying out the ground rules for any entity that wishes to do business in the U.S. or any of those jurisdictions, solves this problem. If Binance is not willing to, and you started by talking about them, disclose, and the reason that Sam Bankman-Fried claims he spent $3 billion was that he could not get the regulators to approve the fact that Binance owned 20% of their platform. CZ was not cooperative with any of those regulators. He was shut out of those markets, and he realized the prize was to get regulated for institutional capital. Just having 4 or 5 markets coordinate, as we do already in other securities, solves this problem in perpetuity. And all these regulators talk to each other. I've been to Abu Dhabi. I've talked to the ADGM. I seek a license there. And I've done the same in Canada. I'm an investor in the license there. These are long-term, very sound structural concepts, but it needs a coordination. And in one phone call, we could solve this problem.
Okay, so Mr. O'Leary, I know that you are a big supporter of crypto, even after you lost $10 million in FTX's collapse, but you are an experienced investor. So let me ask you, do you believe that the potential benefits of crypto are so promising that we should accept weaker anti-money laundering rules and weaker compliance from crypto firms than we require from banks, from brokers, and from Western Union?
No, I think we should apply the same regulatory structure that we apply to existing trading of stocks and bonds on exchanges tied to broker-dealers. That is not complicated. It's already been implemented in other countries. And so, and I take issue, Senator, with your concept that it makes it easier to do money laundering. Currencies have been used for drug trafficking since the 60s in the American dollar, when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do. And that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union.
You
and
know-
I think your answer to that was yes. Is that right?
No.
Mr. O'Leary, you have 30 seconds. Keep your answer short. You're
It's
30.
not yes. I'm just saying if you know your client rules on both sides of the transaction and use a crypto such as USDC that is regulated, you solve this problem, Senator, overnight.
Well, I appreciate that you want the same kind of rules to apply to everyone, and we can talk about what's needed to make that happen. You know, the dark underbelly of crypto is its critical link to financing terrorism and human trafficking and drug dealing and helping rogue nations like North Korea and Iran. Crypto doesn't get a pass to help the world's worst criminals, no matter how many television ads they run or how many political contributions they make. It is time for Congress to make the crypto industry follow the same money laundering rules as everyone else. That is why Senator Marshall and I introduced a bipartisan bill today that requires crypto to follow the same money laundering rules that every bank, every broker, and Western Union all have to follow today. Thank you, Mr. Chair.
To everyone here, thank you. This obviously is something we have been working on for a period of time here and really appreciate the insight you all bring. I do want to follow up on my colleague, Senator Van Hollen's line of questioning with Professor Allen. I want to ask the rest of you. Clearly, she's supporting banning it. If we don't ban it, how do we regulate it? She put forth a proposal, which is isolate it from the banking system and then define it as a security. Does anybody disagree with that or have any other ideas about how it would be regulated? Mr. O'Leary.
The concept of passing legislation that would ban banks from integrating cryptocurrencies and crypto technology, if that were to happen as an investor, I would short every American bank stock because it would make it the most uncompetitive financial services sector in the world. The innovation that is coming forward, once regulated, is going to be profound in terms of how it changes the cost, the efficiency, the auditability, the productivity of the banking sector. Just look at things as simple as ACH transfers, how archaic they are. Look at the Fed wire.
So let me just stop you there. I only have so much time. So you do not agree with isolating it from the banking system?
That's insanity.
Okay, Ms. Schultz?
No, I also don't agree with isolating it from the banking system. I do think that if I were queen for a day to regulate, I would ask Congress to make some clear lines here with respect to what is and is not a security. And I think a lot of crypto tokens do fall under the category of security, but it's not always clear. I also would ask Congress to draw clear lines as to which market regulator handles secondary trading, giving the commodities segments to the CFTC and the securities segments to the SEC. That should put good guardrails in place in order to apply similar risk frameworks to similar risks.
Thank you. Mr. Shankman?
If we allow cryptocurrency to infect our banking system, we will be back here.
Thank
We will
you.
be back here, not in a good way.